In India's asset management sector, Jio Financial Services and BlackRock are all set to form a 50-50 joint venture to enter India's AMC industry. They are targeting an initial investment of $150 million each and will start operations after getting all the regulatory approvals. To discuss this, we have Feroz Aziz joining in, Deputy CEO of Anand Rathi Wealth. Feroz, great to have you on the show. Today we're not discussing specific funds or what to do and what not to do with our money, but it's a broader discussion because this is a big one, right? We're talking two giants joining hands and getting into the asset management space here. Your first thoughts, I mean, how do you describe India as a market? Will it be tough competition? And what would you expect as this juggernaut rolls out?
Srubi, you're absolutely right. Two giants coming together is what is the first thought. But having said which, BlackRock, this is the second attempt of BlackRock. If I have to go back in history, 1996 is when Merrill tied up with DSP, and then in 2008, the 40% stake of Merrill was bought by BlackRock. And the intent of actually owning 100% was expressed back then, but DSP owned 60%. So, of course, DSP owned the full 100%. So point one is the largest giant of the asset management business in the globe, which is $10 trillion of assets under management, followed by Vanguard and Fidelity. So puts things in perspective in terms of the size of an asset management company wanting to enter India. That's point one. Second attempt, and the first attempt actually had a desire expressed in the form of wanting to own the full 100% DSP BlackRock asset management company. Third, I personally think that India is at the cusp of financialization. We have still not even scratched the surface. We did a study which says where has Indian households invested? So we have 670 lakh crores as Indian households. We have just put 4% in equity mutual fund, which is very ironical. We have more money in savings account as a country, as a household, a group, than in equity mutual fund. So we're just scratching the surface. I think we have a multi-decade financialization need. I think it has just begun after COVID, and I don't think from 2013 people have been speaking about financialization. So there's large giants coming in. Point one, I think it's a great news for the asset management industry, and the depth in terms of digital reach is they have a platform called Aladdin, which I think is brilliant, and I think that'll improve the return of Indian household if we can get technology into the deeper pockets of Bharat.
Feroz, can you talk about the India opportunity? How many HNIs, for instance, are there? Do we have numbers like that? And they're putting in substantial amount of money, 1,200 crores, I think, each. So it's going to be more than just a mutual fund. What do you think the grand plan is going to be by these two entities together? The big vision, according to you, if you had that kind of money at stake.
See, I think both these partners had a desire to own asset management business, right? If you look at Reliance Capital, if you know, before the Ambani split, was owned, and that was sold to Nippon because of it being owned by Reliance Capital. So both of them had wanted to have a pie in the Indian financialization, point one. Point two, I think 1,200 crores each, which is about $150 million is what each of them are putting. I think it's not a very large amount for giants like that, but I think this business does not require too much capital unless you're running a full-fledged NBFC. Of course, they have an NBFC license already, Jio Financials. They have a market cap after this demerger of about 20 billion. The other entity has 233 billion. So point one, I think, of course, the plan will not stop at asset management business. NBFC is an offshoot of financialization. Just the creating assets also is a part of any company's aspiration when you're wanting to lend to the granular part of India. So the money clearly expresses that it can't just be for asset management business, because asset management is a people's business. You're earning a fee, you're paying money. It's not capital intensive. So if this kind of capital is committed, I'm sure the plans are level 2, level 3. I think as time progresses, it will unfold, and their desires of finance business will come to light.
All right, Feroz, thanks for joining us. We've spoken about this several times, right? How we're just getting started as far as India goes with this whole financialization theme. But with such a big player entering, Jio partnering with BlackRock, what do you think it means for the rest of the industry? How much of a disruption do you think it will cause? Especially to some of the smaller players in this space, because right now a large chunk of the money is controlled by some of the top hands here.
Yes, it's not a very fragmented industry. If you look at the top three, they hold about 40%. For a country like ours, if you look at SBI, which is the largest with about 8 lakh odd crores into asset under management, it's at 17.6% of the industry. I'm not just counting equity, but all assets, the 42 lakh, 43 lakh crores. So 17.6% is the top guy. The second guy is at 12.7, 11.1. As soon as you come to the 10th guy, there you are as little as 2.9. So of course, there will be some degree of consolidation to the larger player. But I personally think who will be impacted? I don't think the industry will be impacted because the pie has so much to grow. If you just internalize the statement which I made, again, I'm trying to repeat, India as a country has lesser money in equity mutual funds than savings bank account. That I've still not been able to get over this statement because that means that 14, 15, 16% kind of returns in India are possible, but the country wants to earn 4%. 5% and donate it to banking sector for their NIMs, which I think will change.
Feroz, the question is how much money can the asset managers make? The timing is so interesting. We'll have the new TER regulations very soon. So we have 30 seconds left on the call, unfortunately. What about making money? What about this being a profitable venture for all the giants who are there, including the one that's now entering?
Ruby, that's what I was getting to go to. I think the industry shape will depend on how regulation looks at them. And how generous in terms of, because if you have to run a business, they're not an NGO, they have to make money, and that's when they can do justice to people's money. So somebody who's not happy with what they're making. So I think they will make money because there's so much opportunity. I don't think India has come at least 2 decades away before all money moves to index funds. So there is enough money to be made. If somebody wants to do a cost war, he can make very less. If he wants to fight a value war in a country like ours, I'm sure there's enough to make. The largest player is fighting a value war. SBI is not a cost-reduced AMC. They're looking at, for example, they've taken a value proposition. Some people are taking a cost as their advantage. So let's see, each of their fates are going to be different.
Got it, Feroz. Thanks. You just made me feel better. India is still 2 decades away from completely going the index fund way. I don't have too many index funds. Haven't had the time to look at my portfolio. But thanks for that outlook. It makes me feel a little better. Thank you so much for joining in. Really appreciate you being with us on the show. Quick break right now. We'll get you more on the markets in just a bit.